Dxcm stock is down 41.59%, presenting what looks like a very unique buying opportunity. This is in the regular session of today, the 26th of July 2024. And given this plunge, you can easily imagine that a rebound is highly likely by as much as 100%. And a rebound to the levels of around $91.81, $90.83, as you can see, is also 100%. This is all because the stock is now trading at a huge discount to a lot of its projections, a lot of its moving averages. So expect a rebound. Expect that some sort of a rebound will occur at some point. The company announced its earnings outcomes, and it didn't delight the market. It didn't delight the market, and compared to what it was last year, it was a far cry. They had a 23% growth then. So, but fundamentals aside, this rebound is highly likely. We're looking at a rebound into we expect it to come back into this price channel. So, as things stand right now, the lower line of this the lower line of this price channel is currently at 78.71, and since we already have the probability of it rebounding to 90.85 at 100%, so a rebound to 78.71 will also be decently around 100%. As a matter of fact, surpassing 78.71 is highly likely. But when would that happen? I can't exactly say. Maybe in the next, maybe not in the next trading session, but in the next trading session, it's highly likely that it's going to pull up. Surely, if it's optionable, then it will be interesting to have a look at what is going on there. So that's what we're going to have a look and see. That's what we're looking at now and trying to see what can occur here. So it's just stock on this 41% decline, nothing more, nothing less. It's not really moving a lot while we're waiting for the options pit to show up. Let's see. This is what we have here. Okay, these are expiring today. I think they're expiring today, so not a lot is going on there. I think we're not seeing any values. Okay, we're looking at we have some volume, some figures. Yeah, okay, not so fascinating, but indeed things are most certainly going on here. So let's see now. It's a 2-hour chart. Okay. On the 2-hour chart, it's trying to get back into the price channel. So we have 65.07. So we expect it to come back in. At some point, it did come back slightly in. So it's 64.67 or there. 65.06 is what we have. We expect it to come back into this price channel, and I think the upper line. Let's see. The upper line is upper line is at 86.80. So whichever one you want to have a look at, whichever one you want to consider, the probability of it surpassing 65.06, 66.80 is 100% statistically. So let's have a look at the 1 hour. This is the 1 hour now as well. Yeah, it's already, I think, back into the price channel on the 1 hour chart, but still has a lot more room to come back to cover right inside. So let's see whether we can look at other models. The daily chart is as things stand right now, not a lot. It's just consolidating. It went through this. It's a shock for the stock, I want to believe. Nothing is just stagnant there, just moving sideways. Not a lot is playing out. Not a lot. I'm trying to expand it, and let me see. Let me bring it out here. Okay, let me minimize again. Yeah, see, nothing's not much volatility has played out further. It's just stock there. Okay, so but we can have a look here. This is the daily chart on our trading view. You can see the extrapolation is pricing in a rebound. A rebound is expected to occur going all the way towards October the 2nd. So we have 120.87 is projected. So let's see. By Monday we have 101. 101 is projected. 101.88 is expected. By Tuesday, 98.71. And by Tuesday, the 6th of August, 101, rebound towards 101.996, 101.96. So statistically, you should expect that a rebound should happen. Short interest we have looked at is not really there isn't anything there as such, not the skepticism wasn't there before now, so it doesn't have to be. I mean, the short sellers don't have to. I mean, obviously they're probably involved in this. They may be taking their money out because fundamentally nothing is really wrong with the company. It's the folks at Morningstar saying that it's their products are still superior. They're saying here that this near-term turbulence notwithstanding, underlying demand for continuous glucose monitors or CGMs and Dexcom's reputation for superior accuracy haven't changed, which leaves them comfortable that the firm can get back on track as it irons out execution issues. So it must be, like I was saying, it seems it's some issues with execution that spooked the market. So 105.18, the probability that it will get there is also very much 100%. This is its 4-hour chart. 105. Can we relate that to what we have on Think and Swim? $105. Let's see. Can we relate that to what we have? 105. Can I pan and zoom? Pan. Okay, that's 105. We have where's 105 here? Okay, we don't have anything like, okay, we have upper line is at 104, so 100.46, so slightly above its upper line. That's what it's been forecasted. It's projected that it's a Fibonacci projection that it's expected to rebound to. It's an upper projection. It's an upper projection for the stock, So the 10-period moving average on this chart, on this 4-hour chart, is equally has changed direction now. It's tending downwards, obviously, and that is equally the case with the 20-period moving average. So upper projection, the most upper projection is 122.53 for the stock, 122.53. Below that we have 117.72. So whichever way you want to look at it, the probability that it will rebound, is certainly 100%. Surely. Will it happen within next trading session? Naturally, you should expect that it will, but maybe not so soon. But you never know. Okay, we have on the 1-hour chart, we have a close buy projection of 63.62. 63.62. I think we have already seen that on the 63.62. Let's see. This is the 1-hour chart. Let's have a look and see whether we have anything that correlates to 63.62. Let's see. Okay, 63.62. Okay, yeah. Okay, so something close to that. We have that's where its lower line is, so something like that. So it's naturally it's expected, like I've been saying, it's expected to come back into this price channel. It's currently in there now at the moment. Okay, 63.62. It's currently at 62.9, 62.9. So easily it's something that can happen, but it's just, for some reason, it's just maintaining this 41% loss. Nothing much, not just roughly, approximately 42%. Hasn't moved an inch, hasn't changed much. Something is going on there. Okay, so the most upper projection is 70 point. 71.03 on this 1 hour chart. Let's have a look at the 1 minute chart and see what we're looking at right now. So by every technical indications, this is a buy. If you're brave enough, by all means, buy this deep. 62.91 is okay. It's just a slightly an upward projection there. Above that we have 63.05. Above that we have 63.50. 60.50 is something I can easily print on this 1 minute chart for Dxcm. Okay, let's return and see what we can what these guys are saying here. Well, the stock, like I said, mentioned earlier on, the current situation now is they're saying that this is a far cry from the analogous 25% growth seen in 2023. And the company is juggling a lot, including the ongoing rollout of its G7 CGM, its entrance into pharmacy channel, and the expansion and reorganization of its sales force. Unfortunately, these three elements coalesced into a perfect storm in the second quarter with the snowballing of rebates thanks to the expanding base of G7 users. This situation was exacerbated by the influx of new sales reps who have yet to build reputations with physicians, which resulted in lower numbers of new patient starts that are typically more profitable, as they have yet to qualify for rebates. Finally, three major payers shifted insureds to their lower margin pharmacy channel. Cumulatively, this put pressure on both revenue growth and margins, which could take several quarters to ameliorate. Raising productivity of the newly enlarged sales force seems to be the linchpin in their view, and they anticipate this could take some time. Okay, so there's more as well, more down here, and let's see. The company enjoys well-established track record for introducing the most precise sensors for use in its continuous glucose monitors. On the strength of its technology, DexCom has captured an impressive slice of the CGM market, but the recent wave of innovation in the diabetes device market has intensified competitive pressure. Nonetheless, DexCom has done an incredible job of adapting and fending off competition from Abbott and Medtronic, and has begun to make progress in penetrating the Type 2 market, in addition to long dominating the Type 1 market, where US CGM penetration has reached an estimated 50%. They recognize that establishing reimbursement for Type 2 patients can be challenging, but payers have been steadily joining the bandwagon. DexCom should benefit as these the reimbursement pieces fall into place. Okay, let's see what okay, this is today as well. The bulls are saying that DexCom's next gen G7 product should be significantly less expensive, offer a thinner profile and faster warm-up time than G6. Medicare's decision to reimburse for the G6 and G7 is a favorable development for DexCom, as private payers often use Medicare as the benchmark for reimbursement policies. As the growing body of clinical evidence on CGMs demonstrates their ability to improve time in range, they think CGMs will become the standard of care for all diabetes patients. This is what the bulls are saying, and what the bears are saying, that considering DexCom's sensors are already the most accurate, there's less opportunity for significant improvements on that dimension compared with key competitors. Payers and patients shifting to the lower margin pharmacy channels could put more pressure on DexCom's margins. There generally aren't many shifting costs for end users, which could make it harder to retain users if more user-friendly competitive products enter the market. So yeah, that's pretty much what's going on. So still holding a loss of approximately 42%. So statistically, a rebound is 100% highly likely. Rebound to the levels of anything above even anything above a rebound, anything more than the current price is highly likely to be okay, right. A rebound to 90.85% is 100% on its which is a projection it has on its daily chart, and prices above the current price of 60.98 will also give you a very decent probability that it will rebound to such levels. So have a look and see what you make of Dxcm stock, and thank you very much for watching this video.